Roughly 1 month into the Trump administration, the whipsaw from ongoing tariff negotiations between the U.S. and its biggest trade partners have rattled investors and business leaders alike. And as executives focus their energy on navigating constantly shifting policy, the deals market closed out its quietest January in a decade. Here to discuss what this backdrop means for the year ahead, Scott Sperling, THL Partners co-CEO, joining us now. Scott, good to have you back on the program with us, and good morning to you. First, what do you make of the deal-making activity? Is it just companies trying to figure out where they can find footing, find the right deals, and finance them correctly? Or is there something else at play?
I think the answer is yes, but there are a couple things to keep in mind. One, we're coming out of a regulatory environment that basically prohibited any kind of significant combinations that would make strong economic sense for consumers and, in fact, for that industry itself. We had an FTC that was, clearly off the reservation in terms of their interpretation of what their powers and authorities were. We're now moving into something I think that's more rational in that sense. So I think that there's more opportunity to actually effectuate interesting mergers and acquisitions than we were able to do under the last administration. The second point is that we also have been in a world where there has been a combination of economic and global uncertainties combined with very high valuations. And that's an unusual combination, and that in and of itself may have muted some of the financial returns that would be possible from certain types of M&A and certain types of deal doing. I think as an industry, private equity has been a significant part of global M&A, but over the course of the last year, it's really been more some of the pricing, the size of the bid-ask spread that has muted some of the volume of M&A we've seen coming out of private equity. I think we're all more encouraged as we go forward over the next 12 months that there will be more opportunities to see significant acquisitions on the part of strategics and the ability for private equity to, again, ramp up the volume of what it does.